No. We're like exercising Echimini. You see?
Ejimini, okay. The day after Valentine's, you're exercising Ejimini, ne? That laughing
Uh,
from the gym, ne? Okay. Mm. Yeah. Oh, Betuna. But we're about to start, guys. 3 more minutes. Let's just wait for people to come on campus and then those to join online, guys. Make sure that you tell your friends to join. Let's operate. Let's operate. Even if you're in pajamas, it's fine, Lolo. At least you're here to
okay.
work. How fun? How fun? It's Sunday. Eh, manyele ngona umuntu lana ngamapijama. Hayi kubi. Yeah, guys, 2 more minutes and then we start our class, ne? Manje clean. The venue is what you call it. The venue is D D lab, ne? D lab 41. Yeah, D1 lab 401. Ne? For those that want to come to campus, the venue is D lab D1 lab 401. And then those that are online, welcome. It's online. Ne? We are trying something new today. We are trying a hybrid system of both contact and in lessons. Ne? Justin, actually on my way to APK and streaming at the same time. Dango, Justin, you're a real one. We are about to start now. Let's just give it 2 more minutes. Ne? Welcome to everyone online, and yeah. How was Valentine's? I'm still asking, guys. How was Valentine's yesterday? Did someone receive flowers, Nyana, in this call? No one? Girls. What did you guys do to the boys? Boring. Remoshe, Maskis. Just because you didn't receive flowers doesn't make it boring, eh? It was nice for some people, sure. Like, for example, I got a car, I'm joking. Okay. But yeah. What is it? So today we are going to be covering that thing. We're going to be covering an activity, right? We're going to be covering an activity of financial statements and journal entries, right? So I hope you guys are ready for that. Ne? I hope you guys are ready for that. I'll just maybe do a quick summary of yesterday's lesson for those that missed the contact we had yesterday. A very, very quick summary, quick, fast, in a hurry, and then we do a tutorial activity. Ne? Manje, clean. What color was it? It was black. Check it in here. If it's not there, my brother,
You lost it.
I lost it, but let me check somewhere. Could be here. Okay, hi guys. Oh, hi Anele. So gezile sisi. Siyawubona lapho Anele. Sawubona. Just switch off your camera. Switch off your camera, Anele. If you want to be famous on YouTube, you must just tell us, eh? We'll make you famous, quick, fast, and hard. Yeah, can you guys close your cameras? Okay, guys. So we are here for educational purposes, eh? We are here for educational purposes. Miss Anele, Miss Lolo, close the cameras there. Fast, quick, in a hard. Fast. You're gonna distract the people who are here on campus. Yeah? Fast. Fast. So we are about to start, eh? We are about to start. Okay, we're about to now start, ne, guys? We're about to now start. Let me just find my slides for you guys, and then we are going to have a quick recap of what happened yesterday, ne? And then after that, we are going to be doing a tutorial question. So today's lesson is going to be a quick recap because we already covered the content yesterday. However, this part is being recorded, right? So let me show you guys. I'm about to share my screen with you guys. Hopefully you guys can see it, ne? Can you guys see it there online? Just give me a thumbs up. Online, can you guys see my screen? Now can you see it? Okay, just give it a moment. Now you can see my screen, eh? Okay. Sharp. You guys can see my screen, eh? And you guys, of course, yeah. You should see my screen. Fine. So, guys, those that are online, I am hosting a contact lesson, right? D1 Lab 401. So, if you have a question, just ask in the chat box, just type. And then there's also going to be questions asked by the physical class, which I'm going to also have to integrate and transfer to you guys, right? So, just please be patient and make sure that all of your mics are muted, right? Thank you so much. So let us now begin. You guys can see my screen there online, right? So yesterday we covered unit 3, which is what? The financial statements, right? Financial statements. So we spoke about the objectives of financial statements, right? So we have 4 financial statements in particular. We have the statement of financial position, statement of profit or loss, statement of changes in equity, and statement of cash flows. For accounting 1A purposes, you're only going to be dealing with 3 statements, right, guys? Remember, statement of financial position, statement of profit or loss, and statement of changes in equity. So for financial position, what is it that we are referring to? I'm going to try be as fast as possible. For our financial position, we are looking at our assets and our liabilities. Where is the company standing? Is it standing on good ground? Can the banks lend us money? Are people looking at our business and are willing to invest in it? That is what financial position. That is what we call the statement of financial position. It deals with our assets, equity, and liability. Is everyone okay? In person, yes? Yes, everyone is okay. Online, is everyone okay with the statement of financial position? Good, right? Good. Let me just see if there is a question here. Boring. Oh, is that one for Valentine's? Oh, so let me just continue. Then we have the statement of financial performance, right? How is the company performing financially? Are we making profits, right? Are we making money? Are our expenses too high or are they too low? Wait, is that gift? No, that's not gift. Ne? Hey Joe, it looks like gift. Ne? It's like you're his brother. You must actually meet him. I was like, yeah, one. So apologies for that. I just thought I saw long story. But financial performance, what are we talking about, guys? We're talking about money, Mandelas, right? Are we making profits? Year on year end, is our gross profit margin increasing or decreasing? How are we performing financially? Should we lower our costs? Are we effective in whatever it is that we're doing, right? That is the statement of financial performance. Performing, how are we performing, right? And then we have the statement of changes in equity, which is what is dealt with accounting 1A. Changes in equity, we know that we're talking about our share issue costs, our dividends, and our retained earnings, our profit for the year and whatnot. I am going to be dealing with this in greater detail when we are doing a tutorial question, that which we have to complete today. And then we have the statement of cash flow. The statement of cash flow, guys, is done for accounting 1B. This is where we now start talking about cash inflow, right? Money coming in and money coming out. So the statement only deals with what we call cash. Is everyone following? Online, give me a thumbs up. And then in person, you guys are okay, right? Statement of cash flow deals with cash concant, right? Cash. There's Lolo. Hi Lolo, how are you? Who are you? What are you? Lolo, was that a mistake? Are you still thinking of Valentine's, my sister? What's happening? Yes, Lolo? Was it a mistake? Or did you want to give me a thumbs up? Lolo, we are waiting. It's a public platform, this one, Lolo.
It's a mistake. I'm sorry. I'm okay now.
Okay, sharp, sharp. Can you guys just hide your cameras? And Nombuso Pride, please, please. We want our brothers here to be focused. Ne? Thank you so much. So, we spoke about the cash flow. Statement of cash flow, guys, is done for accounting 1B. For accounting 1A purposes, you really delve much into this. You're going to do it as a full statement out of 45 marks for accounting 1B. So, Muni warini about the statement of cash flow. What are these objectives? These are to provide users useful information into making economic decisions, which you guys have already done with your conceptual framework. Remember? You guys already done it in class, I assume, right? If you don't understand it, we also have done it on YouTube. Ne? YouTube. So, yes, we spoke about these statements, and yeah, these are the financial statements we have, right? And then, this is important for you guys to be able to master. You need to know the template, guys, of the statement of profit or loss. So, as you can see here, I said cram and know wholeheartedly, right? It's important for you guys to know this format, and this format is found in the textbook. But of course, it's going to differ depending on the type of activity you are given in the test or exam, because the information might differ. But a normal practical statement, right, is going to consist of what? It's going to consist of revenue. Revenue is the money you get from whatever it is that you selling. So if you're in the business of selling shoes, your revenue will come from what? Selling shoes, right? Then cost of sales will be the cost to get the inventory. So the money from where? Your supplier, right? Then revenue minus cost of sales, you get what? Gross profit, right? Gross profit plus other income. What is meant by other income? Other income we refer to income that is in addition to what you already serve, but it's not your main business model. What am I saying? If you're in the business of selling shoes, you can also want to sell socks, right? Because those are complementary products, right? The selling of the socks shouldn't necessarily fall under your revenue if you're in the business of selling shoes, but rather it can be other income. Again, what if you're also renting out property to another person? We can call that what? Rent income, right? It is not the main source of the business, but it's also additional income that which we have, right? Is everyone fine with that? Good. And then our other incomes here, they say income from subsidiary. So you guys know with income from subsidiary, we have what we call a parent company. We spoke about this in yesterday's lesson. A parent company would be what we call Meta, right? Meta created by Mark Zuckerberg. You guys know Meta, right? We say that Meta is the parent company because it's the one that is controlling of all the other ones that fall underneath, right? Like what? Facebook, Instagram, Threads. What else is there? WhatsApp, yes. Not Twitter. Twitter is X and that's owned by Elon, so that's not the same thing. But you guys get the vision, right? You guys get the vision of what we call a parent company. If you are not a parent company, you are not going to be called a child company. Ne? It's not that. We are going to call you a subsidiary, right? A subsidiary. A subsidiary would be the companies that fall under the main umbrella of a specific company. Is everyone following me? Fine. But again, income from subsidiaries, you guys deal with accounting 1B. Not now. For 1A, you might find it in the trial balance and all you need to do is just copy and paste it to your statement, right? But it's usually tested in accounting 1B. And then we have income from other financial investments. This could be fixed deposit. A fixed term deposit, you go to a bank with your money and you want your money to gain interest, right? We know some people here are alcoholics, so they know that when they see money in their bank account, they get too excited. Ne? So to avoid you wasting that money, just put it in a fixed term deposit. You guys have heard of a 32 fixed term deposit, long term fixed deposit and whatnot, right? Where your money gains what we call capital appreciation, right? Maybe it's fighting inflation or they're giving you better odds and whatnot so that your money doesn't lose value, right? You guys know inflation, you did economics, right? No one knows inflation? You don't know inflation? You do know inflation? You don't know inflation? What is inflation? Oh, what is inflation, guys? There's Kabelo here in the chat box. Hi, Kabelo. You are live, yes?
Yes, inflation is a general increase in the prices of goods and services.
Yes, broadly speaking, inflation is the general increase in prices, right, of goods and services, right? So you know that, how do I say it? If you keep money in your bank account, right, guys, it loses value because interest and inflation accumulates, right? So for you to hedge inflation, to hedge is to fight inflation. It's better to put your money in some savings account or whatnot so that it can gain interest of like 5 to 6% depending on what the interest is at that point in time, right? Everyone's fine with that, ne? Sharp. Then in high school, you guys did what we call expenses. You had them in separate line items. What do I mean by this? So you had repairs, you had maintenance, you had you had what, right? I said it in yesterday's lesson. If you do that here, right? If you do that here in high school, you will fail. And you will fail a painful fail. A fail that will make you want to go home now, right? Expenses here are not recorded separately, but rather they are recorded under distribution, administrative, and other expenses, right? So can you see here, guys, there's this bracket nana here. You need to record all your expenses under distribution, administrative, and other expenses and open a bracket. And then when you are adjusting your figures, you just add and subtract within those brackets instead of writing them as separate line items. Is everyone understanding me here? This is a revision for those that came yesterday. For the online people, is everyone okay with what I am saying? Can you guys hear what I am saying, guys? Are you guys following? Good, right? So we have them as not separate line items, but rather distribution, administrative, and other expenses. Is there a question here in person? No question, eh? Fine. And then we have what we call finance cost. What is finance cost? Finance cost is interest expense, right? When you borrow money from the loan, man, you see now, English. When you borrow money from the bank, right? When you borrow money from the bank, they charge what we call interest, right? Because the bank is also in the business of what? Making money. So the interest that which is charged onto you for borrowing that money is called a finance cost. It's not interest expense. Am I making myself clear? It is interest expense, but we just word it differently at university level. We call it finance cost. There's a sister here who's wearing glasses and she seems very confused. I'm worried. Are you okay, my sister? You sure. Am I moving too fast? You are following. You did accounting in high school? Sure, yeah. Don't know, Harine. We are here. We are going to cruise together. Yeah? Ends a boy. Just follow me. Write notes if you can, but if you're more of a audio listener, it's fine as well. Just pay attention. If I'm moving too fast, you let me know. Okay. Are you doing BCom accounting or BEC as a course? So you're doing BCom, you're doing accounting 1A as a module. Okay, you're in the right vein. Yeah, it's fine. Everyone here is doing BCom accounting, BCom business. You all doing accounting 1A here, ne? Now, who's you doing what? Friend. So you are doing extended, ne? We're gonna have another online lesson for Frem at 8 o'clock, ne? But the work we are covering is very similar. It's just 1A is more on steroids, you understand? Frem is easier, you understand, because it's an extended program. So you can also just be here for your entertainment and just learning more about accounting. It's gonna help you. But for Frem, we have an online lesson later on, or just go to YouTube for the content. And then you good, sir? Accounting? Accounting A. So you are doing BCom economics, econometrics, industrial psychology. So again, for accounting A. So let me explain accounting for you guys, for those that don't know. We have what we call BEC accounting, accounting 100. Ne? That is the most dangerous accounting for first years. It's done by those that are doing BAc, right? So Bachelor of Accounting Sciences. Ne? Those ones want to be CAs. They're here for the real thing here. And then there's Accounting 1A, which is on less steroids. Ne? It's what you guys are doing now. Then there's Accounting A, which is for those that are doing BCom Economics, Econometrics, Industrial Psychology, Logistics and Transportation. It's vibes, that one. It's nice. It's lenient, it's not too hard, it's not too So what you're learning here, if you're able to understand this, Accounting A should be very easy because it's very similar to what we call FRAM. But FRAM, Shem, that one is very, very easy. Ne? If you fail FRAM, you do not deserve to be an accountant. Ne? I am telling you for free. Ne? Okay, I'm joking, guys. I get some people fail first before they pass. Dreams delayed, not denied, eh? So yeah, keep that energy. But yeah, you can also be here for Accounting A. But for more of our lessons, just go to YouTube. We've already uploaded them. We have lessons for Accounting A. So you must just make sure you're not confused between Accounting 1A, Accounting 100, and FREM. They are different modules, even though at the end of the day, they are all accounting. Am I making myself clear? If you ever see yourself joining Accounting 100 class, leave it immediately. Immediately. That one is on steroids. Ne? That one is on steroids. So don't do that. Hi, Cabello, your hand is up. Is there a question before I move?
Oh, no, sir.
Okay, just put your hand down. Ne, Kabza? Dango. So, we spoke about finance cost. After that, we have what we call profit for the year. How do we get to profit before tax? Revenue minus cost of sales plus other income minus our expenses gives us profit before tax. And then income tax expense is usually given for Accounting 1A purposes. You won't calculate it. You're going to deduct it to get your profit for the year. Is everyone fine with what I just said? Sharp. Now let's see. As you guys can see here on this financial statements, our expenses here are written in brackets. The brackets indicate what? They indicate that we are subtracting. Is everyone following? Yes. Ne? Fine. Then we have what we call the statement of changes in equity. Changes in equity, there's a balance at the beginning of the year, which is usually given on our trial balance. The trial balance is basically something that is given with transactions, and we just need to make sure that we prepare those information using our additional information. You will see what I'm talking about when we're doing a tutorial question. So this is the template you must cram. Again, know it wholeheartedly, right? Again, for Accounting A and FRAM, if you guys are going to be doing this, it's the same thing. So also it's important for you guys, right? We have changes in equity, an issue of share capital. When people put money into the business, we call it issue of what? Share capital, right? You see this girl is very naughty. This one, Abigail is a naughty girl. Abigail, you said you are going to come to the contact lesson. You are joining the online class. Why did you lie to us, Abigail? Shame on you. Yes, we are waiting, yes.
Guys, I'm really sorry. I'm just tired. Kids are listening here today free.
Bafan. But it's fine. At least we are here online. It's fine. Right? We're just doing a recap of what we covered yesterday. So issue of share capital is basically issuing of shares, money we get as a business for selling our equity or shares, right? Fine. Then we have profit for the year and the balance at the end of the year. Can you see here our issue of share capital falls under our ordinary share capital. And then our profit for the year falls under our retained earnings. It's important for you guys to know this because it's going to be tested in your first test as well. Ne? Welcome, latecomers, welcome. Those that want to come on campus, you are more than welcome to do so. If you didn't pass, you are fine where you are. Ne? Sharp. Then we have the statement of financial position. Statement of financial position deals with our assets, equity, and liabilities. We've done this before. Accounting equation, what does it say? Assets equals equity plus liability, right? So your assets here, your total assets should be the same as your total equities and liabilities. Can you guys see here that it's 14,408,535? Yes, right? It's equal, ne? It's balancing, right? Fine. If ever you find yourself in a situation in a test where your assets are not equal to your owner's equities plus liabilities, again, whatever it is that you are doing, it is not accounting. You are lost. Ne? You deserve to be an engineer. You deserve to be a nurse, you deserve to be a doctor, save lives, it's fine. But accounting is not what you're practicing. Ne? Whatever you do, make sure that your statements balance, even if it's with wrong figures. Am I making myself clear? You get principal marks for making things balance. Can those online just give me a thumbs up to indicate that they are understanding exactly what it is that I am saying? Veis Kabelo and Mbata. Hi Mbata. Was that a mistake? Kabelo, just lower your hand because I always assume that you have a question. Kante, no. It's no question. Fine, right? Make sure, guys, that your assets equals your owner's equities plus liabilities. Fine. Under assets, we have what we call non-current and current assets, right? Non-current assets are assets that are held for a period of more than 12 months, which is a reporting accounting period, right? More than 12 months. These are things that are not easily liquid, right? They are very hard to sell or buy, right? What am I talking about? I am talking about PPE, property, plant, and equipment, not EPEP. Am I making myself clear? Property, plant, and equipment, PPE. What is PPE? We are talking about assets such as our land and buildings. We are talking about investment property. We are talking about equipment. We are talking about vehicles, right? They are held for more than 12 months, non-current assets. Our current assets are assets that are held usually for a period of less than 12 months and they are easily sold. Inventory, bank, cash and cash equivalents, trade and other receivables. Trade and other receivables refer to people that owe us money. Am I making myself clear, guys? Everyone's fine. Online is you. Is you. Are you okay? Are you okay? There's Kabelo. Kabelo, unmute your mic so that we can deal with your question because you don't seem okay.
Okay, sir, I don't understand what you just said now. Can you please re-explain
Which part don't you understand?
the trade and other receivable parts?
So the trade and other receivables, we are referring to people that owe you money. A practical example, ne Kabelo, you sell nyaupe and vele you look like the type. Ne? You sell nyaupe Kabelo on credit. Ne? You sell nyaupe on credit to a customer. What we basically mean is that the person that you sold credit on nyaupe to, ne, they are a receivable because you are expecting to receive money for the nyaupe that which you sold to them on credit. Is that making sense to you, Kabelo? Fine. Let's say you are dealing with SARS and you overpaid your SARS income tax. If now you overpaid your SARS income tax, SARS owes you money. If SARS owes you money, they are a receivable. A receivable is an asset because it meets the definition of an asset. Now, I'll come to you just now. Do you have a question? I'll come to you just now. Right? What is the definition of an asset? It is a perk, a present economic resource controlled by the entity as a result of a past event. Right? An economic resources is a right or duty that has the potential to produce economic benefits. You guys have already done this with Ms. Kamu, if I am not mistaken. Am I making myself clear or am I lying? I'm making myself clear, right? Yesterday was Valentine's, but I can't repeat the same joke about the assets and control. Ne? That joke is going to be dry. Ne? So I mustn't make it anymore. They'll watch it on YouTube, those ones. Ne? Yeah, it's fine. Let's continue. Ne? There's a question here in person. Hi. Yes, it's a accrual basis of accounting. That's why it's important to know your theory, otherwise you'll be cooked. Accrual basis of accounting suggests that we record transactions when they happen, not necessarily when payment is made. So Kabelo here, who we know is a Nyaupe drug dealer, right? He sells Nyaupe and then he sells it on credit, but he records his revenue. Why? We record transactions when they happen, not necessarily when payment is made. And then only after the customer pays him his Nyaupe money back, can he then say his bank account increased, right? But what happens if now Kabelo here sells Nyaupe to Tabiso, for example, and then Tabiso doesn't call it, or he doesn't repay him? What accounting practice or what accounting policy must we then use to now recognize the lack of payment from Tabiso, who bought Nyaupe on credit from Kabelo? Negative profit. Oh, banja. Oh, banja. Segulate, man. Oh, segulate. So there's a person here who says negative profit. Oh, banja. Anyone else? What happens when Kabelo can't take his Nyaupe money back from the customer?
Would it be a drop in inventory and also a drop in...
Yes, inventory is dropped, but like, leave the inventory stuff because the inventory is.
Okay, wait. Restart
The
the question.
question is, we have Kabelo who sells Nyaupe to Tabiso. Initial recognition. We're gonna debit receivable. This is in Kabelo's books. Debit receivable because our assets are increasing. Credit revenue because our revenue is increasing. Debit cost of sales because our cost of sales are increasing. And then credit inventory because we have less inventory to sell. Ma'am, if you are lost, I'll come back to this when we're doing chapter 4. We're gonna show you guys the cheat code. That's what's happening. Fine. That's initial recognition. We've recognized revenue and inventory sold for Nyaupe. Sharp. What happens now when Kabelo is supposed to receive his money from Tabiso, but Tabiso doesn't pay? How do we then recognize this? Some says a drop in Ish Maverick. Wait. There's no drop in income. They just need you to do accounting in high school. It's bad debts, right? Yes. So bad debts now, Maverick, is a situation where we de-recognize what the person owes us because they've made it clear after numerous attempts that here we are not going to get our money back. A bad debt is an expense. So when Tabiso doesn't pay, Kabelo is going to debit bad debts because bad debts increase on the debit side, and then he's going to credit the receivable because he owes us less because we are de-recognizing how much is being owed. Do you understand? A bad debt is recorded once you know or this person will not pay me back. You've tried email. You guys know. You guys yourselves are bad debts. Hey, Mgani, I need 500 ends. A boy ends are fast. Fine. After a week, Mgani calls you. And then you pretend as if you're confused as to why they are calling you. You understand? Now the person that borrows you money must beg for their money back. Guys, have some decency, guys. The same energy you came with, you must live with. So you guys are bad dates, really. You know yourselves. But yeah, that's just a situation that we're going to be dealing with going forward. Right? Fine. Then we have our total current assets. So our total assets is non-current and current. You get total assets. You get a figure of this 14,406,535 rands. Equity, we have what we call share capital and retained earnings. You can just get the figures from our statement of changes in equity or from the trial balance, right? Our share capital is the money of amount of money we have that people have invested in our company, right? Retained earnings is basically the money that we have left over after deductions. So this is after paying for our expenses. This is after paying our dividends, which is a payout we give to our shareholders for investing in our company. Am I making myself clear? Is everyone fine? Sharp. Let me come to online. Online, is everyone fine? Is everyone all right? Is there a question here before I continue? Did you guys all sign the register here? Those that didn't sign the register, just... Is everyone fine? Online, you guys are good, ne? You guys are good. Sharp. Ends are boy, ends are fast. Ends are fast, ne? So basically we are done with chapter 3, guys, with what you call it, the financial statements. You guys are probably going to do this in class next week in 20 minutes, 30 minutes, depending on who your lecturer is, ne? Sharp. Now we come to chapter 4, which is the double entry system. Before I continue with chapter 4, is everyone okay with chapter 3? You guys in contact, are you okay? Online, is everyone fine with chapter 3 before we move?
Sir, can you please re-explain statement of changes in equity?
So statement of changes in equity basically indicates the changes in what? Equity. So when people invest in our business, our equity is decreasing. No, is increasing rather, apologies, right? So changes in equity basically refers to the literally changes in equity of the business. The more people invest in our company, the higher our equity then becomes. And then our dividends, if we have more dividends, our equity is decreasing. If we have less dividends, our equity is increasing. If our profit for the year is high, our equity is increasing. Am I making myself clear, Sinazo?
Yes, I understand. Thank you.
Not a problem. So before we move on to chapter 4, for just context, do you guys understand? If you guys were to run a business, right? If you guys were to run a business and you're preparing financial statements, would you guys pay your shareholders, right, a large dividend payout policy, or would you guys be on the more reserved low dividend payout policy, and why? Let me ask the question again. If you own a business or a company, I'm asking you guys as an individual, so there's no incorrect answer. If you are a business owner, are you going to have a high dividend policy or a low dividend policy? What do I mean by this? Will you pay your shareholders high dividends when it's time for dividends payouts, or will you pay them low dividends when it's time for dividends payouts, and why? So this is for both in class and online. You guys are more than welcome to think for 2 minutes or so. Someone's already excited. Sipokazi, you didn't even think, but it's fine. Hi, Sipokazi. What would you do? Talk to me. You are a business owner of whatever business you are in. What do you do? And why?
Hi, sir.
Hi, how are you?
Um, I will pay
How are you?
low amount. Oh, I'm good, and you?
I'm good, thanks. Yes.
Um, I think I will pay lower amount to shareholders,
Okay.
the dividend, because I will be investing for future growth for the business.
Okay, thank you so much, Sipokazi. So what Sipokazi is saying is that she's going to have a low payout policy because the money she's going to be using for expansion purposes, right? It's rather cheaper to use your own money than to borrow money, because with borrowing money there is interest. However, with using your own money, the risk is onto you, Vele. Ne? So thank you so much, Sipokazi, for that. Is there anyone in person who would like to answer, or must I give it to Khoitsoni? Is it Khoitsoni? It is. Khoitsio. Khoits. Yeah, Kekan. Steve Kekan. Tina Namagang. Did you guys know that Steve Kekan is blind? You don't know that? You guys know Steve Kekan? You don't know Steve Kekan? You don't know Steve Kekan? No? Mara Drake, you know, but it's fine. Yes, Kekana, you're more than welcome to speak.
Oh, okay. Hello.
How are you?
I'm good. How are you?
I'm good. What are you?
Pardon?
I'm joking. Never mind. Ivan, it's fine.
Oh. Okay, so back to the question you asked,
Yes,
right?
ma'am.
I feel like there's not really a definite answer to that because you can't expect to pay shareholders a very.
We asked for a personal perspective. When are you gonna play for both teams?
But you are exploiting shareholders if you're making large amounts of profits and paying them low dividends. It's exploitation.
What will you do? You cannot pay them high dividend policies, but also at the same time pay them high dividend policies. What will you do? When?
I get it, there'll be contributing factors also.
You're like complicating things. What will you do, my sister?
It'll depend.
What will you do, my sister? You have a business now as we speak. What are you going to do?
Okay,
And
let's say
why?
the type of business is fast fashion, right? Obviously, the dividends are going to be low because fast fashion is always evolving.
What business do you want to own?
I don't know. That's I'm giving an example of fast fashion.
What business do you want to own? Because I see you coming with examples. If you want to run a business, what business would you like to own? What do you like?
Transportation.
So transportation, so logistics, trucks, buses,
Yes. Yes.
railways and stuff. Sharp. You run that company. You made profits. Are you going to have a high dividend payout policy or a low dividend policy? Wena self. And why?
It's going to be low.
Low. Why?
Because of expansion that will be influenced by the interest rates, especially when we're looking at buying more vehicles. So the prices of the installments are going to get influenced by the high interest rates.
Okay, so you're saying that based on the expansion that you want the logistics company to have, you're gonna have low dividend payout policies. So that's the side you're sticking with, yeah? Can you see that you've made a decision?
Yes.
Yeah, you've reached a conclusion and a consensus. Not this thing of, well, technically, we first have to look at the dynamic. Get
But
straight to
it's
the
exploitation.
sharp. It's what? It's exploitation. What?
Exploitation.
To
You are
who?
exploiting shareholders because you are making large amounts of profits but giving them low dividends.
But who's to say that the market share value prices is not increasing? Like the share price of the stocks is not increasing now. What if they want to sell shares? Let's say they bought your share company for like 5 rand a share, but now it's worth 10 rand a share. If they sell their shares, they make a profit. Is it really exploitative though?
Oh, yeah, in that case, it makes sense.
Okay, dango, right? So
Thank
businesses
you.
have different policies, right? And you as a business owner, you need to be able to determine which one works best for you. So here, people here spoke about low dividend payout policies because they want to expand their business, right? But there's also an alternative side, right? Where businesses prioritize paying large dividend payout policies. Why? It is to invest or to attract other potential investors, right, guys? It is to invest and attract other potential investors into investing in the business. You guys follow? Because if they know that there's a huge payout policies, people are going to be what? Interested in investing in the company. Right? But yeah, now we go to what? Chapter 4. Double entry system. Double entry system, we have what we call a T account. We're going to do it when we're doing the activities. Apply the definitions between relationships and elements, journalize and whatnot. So with elements, we've mentioned this before, 5 elements, and then we have different accounts under those elements, right? And then generalized transactions, they're basically saying for every debit, there's a credit, and we're gonna generalize that, right? Prepare simple financial set of statements. This is what we're also gonna do in the tutorial activity, right? Any transaction will have the following effects on elements. Increase in asset and decrease in another asset. What are we talking about? You are buying a car using cash. Your assets are increasing because vehicles are increasing. You have more vehicles. But your assets are decreasing because bank is decreasing. You have less money to spend, right? Sharp. Increase in asset and increase in liability. You borrow money from a bank. Your bank account is increasing because money is deposited into your account. However, your liabilities are also increasing because you have more liabilities. You owe people. You have a present obligation to transfer economic resources as a result of a past event. Right? Fine. A decrease in asset and a decrease in liability. You are paying back the loan you borrowed. Money is coming out of your bank account, so bank is decreasing, asset is decreasing. Liability is decreasing because money is coming out of your bank account to pay out a loan. So you owe the person you borrowed money from less money. Is it fine? And then increase in a liability and a decrease in another liability or equity. This is where you borrow money to pay a person you already owing. Ne? Dangerous game. A loan shark, right? You borrow money from Jabulani to pay Tabo. Because you know Jabulani, because you know Tabo is a very dangerous creature. Ne? If Tabo doesn't get his money, you will die. So you borrow to pay. You understand? Is everyone fine with that online before I move on? Online, everyone fine? Good. Ne? Good. So now we can just continue. This is a basic T account, but we'll explain it more when we are doing actual activities. A T account, basically, we need to know what account we are dealing with and whether it's increasing or decreasing. So yesterday we had a cheat code. We know that our assets increase on the debit side, which is that left-hand side, right? It's this side for those that don't know debit. This is debit, left. your weak hand is left. Our assets increase there, and they decrease on the credit side, which is the right hand side. And then our owner's equity is the opposite alongside our liabilities. Owner's equities and liabilities increase where? On the credit side, which is the right hand side. And then they decrease on the debit side, which is the left hand side. Are you guys following? You guys will see once we do like an example, right? But yeah, fine. Ne? Is there a hand? No, there's no hand. Tebello here, join, welcome. So yeah, for you to be able to do T accounts, guys, and your financial statements, we need to deal with what we call our journal entries, where you debit and credit and narrate the recognition. You need to recognize the transactions, because in accounting, that's what we're doing. We are recognizing transactions. For you to come to the T accounts and the financial statements, you need to have prepared prior journal entries. Ne? You will see them, we are going to do them when you're doing a tutorial question. Ne? Let us do a tutorial question based on the journal entries and present the statement of profit or loss. And then here we are just praying. Hey, Yenda, what I mean. Thank you so much for the great lesson. You guys know these people? Anyone? Fashion? Who's who? Pharrell Williams, yes. Head designer of Louis Vuitton. And then do you guys know this one? No, ne? It's fine. Let's leave him, ne? It's fine. But is everyone fine with what we have covered so far? By the way, this is Nori. He's like a hip-hop guy. He's very cultured. If you know hip-hop, the hip-hop doggo, they're referring to this. Right? Is everyone fine? Is there a question before we actually do a tutorial question itself? Online, is everyone okay? Is there a question? Online people, is there a question? Question? So we have 6 minutes left in this call, né? So what I'm going to do is that I want to show you guys the tutorial activity. I'm going to send it where? I'm going to send it on the WhatsApp group chat, né? And then I'm going to create another link for you guys to join, and then we're going to be starting again at 10 past. If you're not here by 10 past, as we are moving, because we already have a contact class here taking place. So those that are online, I'm going to send another link for you guys to join. And this link, it won't have a time frame, so don't be 1 hour. It's going to be for as long as possible until we end the call, or the lesson rather. Ne? So please, I'm going to share the activity we're going to be doing together now. So leave this call, go on WhatsApp and receive the new link so that you can join, so that we can continue at 10 past. Ne? Thank you so much guys for joining, and yeah, I hope you guys enjoyed the first part. Brought to you by Japanomics Tutorials. This is Spotify. Listen to free ads.